Good afternoon, traders. Welcome to this week's Elliott Wave Forex and Cryptocurrency Market Analysis webinar. I hope you all had a wonderful week. All right, so this week you'll see the title or the theme of this week's webinar is how the interbank market works. Now, understanding that we are doing market analysis here, this is not a specific special session on how the interbank market works. As I'm explaining some of the setups and some of the trade recaps that we're going to go through, I'm going to be showing you exactly how the interbank market works. Now, who is the interbank market? So the interbank is the large financial institutions, the large banks that trades amongst each other, and those are that is the only institution, only institutions that can actually move market in a certain direction. Now, there are a number of participants in the Forex market. Obviously, one of them, as I've mentioned, is the interbank market. Then we've got brokers. Now, brokers do not have or do not control the direction of the market like the interbank market, but what they have is access to the market. Right now, we also have us, the retail traders. So now we also cannot control the market. We also do not have access to the prices of the interbank market. So that is why we use the brokers as the middlemen. So the brokers make their commission from giving us the price from the interbank, and they give us the price with a commission or a higher price than you'd get from the interbank market. So as we're going through the weekly analysis, obviously using the Elliott Wave theory, I'll be showing you exactly how you should be trading. Now, because we don't know the direction, we don't control the direction, we don't have access to the market, how do we then trade? Why should we even be in the market? Is this not gambling? So the reason why we trade with confidence is that we have learned that there is a specific regularity in the market, a rhythmic regularity, but that means repetitive patterns that we can trade with confidence and actually make decent and fairly accurate predictions in the market. You will see as I go through the trade setups just now. All right, so we're going to go through the trade setups, and if you like the video, please hit subscribe and like the video so that next time I post the video, you get a notification. So it's going to be a very interesting webinar today. There's going to be some educational materials that you'll see here as well as we're going along. Now, let's start with, before we start with trade setups, I've mentioned that we're going to have a few changes in the coming year. There's the website is going to be ready in a week or two, which is going to explain all the changes in the next year. And one of those is the structure of the course and the price of the course, which is going to go up from $529 US. The details will be explained in the webinars. In the website as it's going to be launched in a week or two. So we're just waiting for that to be launched. Now, if you're interested in attending the course, which is in February 2020, that is the live course. We've got a full recorded course, which is exactly the same as the live course. The only difference is that you don't interact with me directly or live during the course, but you can get the material and start learning in the meantime. Now, what we do in our group, we've got daily webinars. So what you see here, the page that you have got open here, you do not have access to everything. What you have access to is the weekly webinars that I do here. Now, these are the weekly webinars and the videos that I post here on a week-to-week basis. So what you don't see is these daily webinars. And as you see, one of these daily webinars is I'm going to go through the trade recaps now. You will see that this is the gold trade. We have been talking about the gold trade and the silver trade for the whole of last week until it eventually dropped to this level. Now, that is the benefit that you get from this webinars. Now, let's go through the trade recaps. So for the course, if you're interested in buying the course right now, you can contact me as per my contact details. You'll find my contact details on or under the description of all my videos. For now, let's go through the trade recaps and look how that played out. Now, what I have got here is the gold setup that was posted. This was around June. Let me just check, make sure that it was July the 2nd. Now, this is when gold was still pushing higher from around 1,400, and this was the setup. We all know that gold went and even pushed up as far as the 1540s. And at this point, if you remember, I said that I am taking my profits and I'm not interested in any more move on the gold upside. Now, let's go through what I gave you last week. I said I'm going to give you some sort of Christmas present. I hope you all benefited from that. This is an update. This is gold. This is how it eventually played out. It made a triangle, and you can see our setup here. This was in July still, guys. This was in July, and you can see the setup, and this is when we entered, and how this one eventually went up to 1,500. We're still talking about July. We're going to talk about now, right, in a bit. And this is how it was eventually playing out. Gets out of the triangle, still updating that it has gotten out of the triangle. It's still time to buy. This was then, and eventually gold pushed up higher for $250 all the way up to 1,500, as you see. Now, how do we get this right? How do we get this right? Now, anybody can learn the Elliott Wave theory, guys. I keep saying that it is intuitive. You don't need mathematical background or anything like that, but you need a strategy to trade this. Now, this was also silver, okay? So we're going to talk about both silver and gold because that's how they are playing out. So silver also, you see that there's a corrective structure there, and it also eventually played out as forecasted. As you can see there, that is the move on silver. Okay, so that is the move on silver, as you see, played out exactly. This is because we've got a specific strategy that tells us when a correction has ended. Okay, now let's come back to last week. Last week, I posted both gold and silver on the trade setup and also on TradingView. If you follow me on TradingView, you'll see that I have posted 2 setups 2 weeks ago on silver and gold. So this is the latest one in our group. So you know what we've been looking at on gold, and when it eventually came up to this blue box here, we were saying that we are just waiting for this to go. Now, talking about the interbank market. Now, everyone will see that this is coming down. Everybody would want to have a short position here if you understand anything about the Elliott Wave theory. But if you were the interbank market, your job is to make money, and you don't make money by making traders make money. So if you were the interbank market here in this case, what would you do? You can see that everybody is short. There are short orders all over the place, and everybody wants to take this down. What do? You know that if you just let price go down, you're going to lose money. Now, you need to think like the interbank market. If you are the interbank market, what would you do? What you would do is you would try to fool everybody into thinking that this price is coming down. And when you do that, everybody is going to be convinced that this is coming down. But then you do this, you take it up. You take it up. What do you do? What happens to all the traders all the weekends when you're taking it up? Everybody panics, everybody takes out their positions, and they all get out for losses. And when everybody's gone for losses and everybody has lost confidence in the move to the downside, what do? Then you drop it. And this is what you need to think like. You don't want to be thinking like any retail trader. You need to think about how the drivers of the market are thinking so that you can go with them. And what I've just shown you here is exactly what has happened before gold dropped. Before silver dropped, they make this short squeeze, and I'm going to show you now on the chart. Let's see what that looks like. And that is absolutely critical. And if you don't understand how these banks work and how the Elliott Wave theory works, you're not going to catch these trades. Now, this is exactly what has happened. I'm going to show you on the 1 hour. It was easy. Everybody could see it. And I said in our group, I told out my traders that do not be fooled. Look at this. This is a nice pulsing move and a correction, and everybody's excited, and now it's breaking out the correction and everybody wants to just sell. Now what happens? Look what happened. A spike. This spike was not red like this. It was a strong bullish candle, like some will call it, that looked like it was going up. What happens in that case? Everybody panics, everybody gets out of the positions, and what happens eventually? This is exactly what happens. Now, we understand wave theory. I feel that the way Elliott Wave theory moves exactly how the interbank market works. But you cannot be trading only the Elliott Wave theory. without a specific strategy. You need to have something that tells you when the trade is ready, and that is what we have. We've got a specific strategy, and it's a 3 confirmation strategy. We look at only 3 things, and when those 3 things have confirmed, then we take the trade. And this is exactly how we get the trade. Now look at this. We found this trade here. The whole week we've been talking about this. This is gold. But we could understand that, yeah, we can see that this is going to go down. Now, I wish I could show you the video. And I said to my traders, do not get fooled with this. There's a possibility for this and then a drop. I've got 500 traders in my room. All of them can attest to what we're talking about here. We said, be careful. There's a possibility for it to come back up here and come down. Now, that is what happened on gold, and that is how it dropped. Now, you will see also on the 4-hour. Let's go back to our trade setups. This is what we do in our groups. You'll see also under trade setup that gold eventually made this move. As it was coming down, the first setup was when it was making the 3-wave move to the downside. Again, the theme for this week, how the interbank market works. You see a clear 3 waves. All the Elliott Wave traders, all the support and resistance traders will be looking at this and saying, okay, this is a clear pullback and we are going to go down. Okay. Now what happens? Interbank market, what do they do? They push the price up. But we know that the price is only making a structure that is familiar. And for us, it's a simple regular flat, 1, 2, 3 up, 1, 2, 3 back, pulsing move up. And then eventually what happened? We all have seen what has happened. We are already here now with gold. And this is a simple ABC structure, not a double XY, a simple ABC structure, and then we drop eventually. And now this is how you need to think. Now, if you were just a normal retail trader trading this, or support and resistance traders trading this, you'll be thinking, okay, this is a major resistance zone. By the way, Elliott has studied also this support and resistance. He's also studied head and shoulders patterns. He's also studied double bottoms, and he found those things to have a lot of limitations, and until he discovered the theory. Now, what has happened here? We get a pullback here and at the critical level, and everybody's thinking, okay, we're going to break out of this, and you lose money because you don't know that you are going to have this coming down here, coming back up, and then coming down eventually. Now, if there was no wave theory, if you don't have the wave theory, your forecast will only be either the market goes up or down. But with wave theory, we understand that the market goes up, down, and sideways. Okay, now let's run through all the trade recaps. Now you've seen that how they work. Now change your mindset. Don't trade like any normal retail trader. Think about how the people that are driving the market think. Now that was gold, and let's look at silver. This was gold update. This was an update on gold, and this is how it has played out. I've already shown this. Okay, so let me run through all of them. Now, the next one was pound yen. Pound yen also, as I've said, we've got a specific strategy, how this works. Pound, we started looking at it when it was still here and expecting it to push higher from here. But we got this move to the downside here. We got this one to make a double correction. And eventually when it made this corrective structure here, I said, we saw that the indicators, all the indicators had confirmed, and when we took this one this year, we were never in negative at any point during this trade, and the pound went up to this point. Yes, we've got a pullback now, and we're going to talk about the pullback in the yen pairs. Now note that the gold has broken down. There was no reaction from the yen pairs, so I'm expecting when market opens that the yen pairs are going to push higher, regardless of what the structure looks on the yen pairs. It does not look like it's downside, but because of correlation, I'm expecting a reaction in the opposite direction on the yen pairs. Now that is a pound, and let's see how that pound played out. Our pound yen played out. You'll see it as we go along. I want to see one with an update. Yes, one with an update. This is how this one has played out eventually. See, from here, there was never a move back into this trade was never in a red. It was just pushed up higher for over almost 200 pips. Yes, we've got this pullback, but as I'm saying now, the yen pairs, we're expecting them to push higher because of the gold moves to the downside. Why is that? Because there is an inverse correlation on that. EURAUD, this one has already played out, although this one has made this move first to the upside, but we've already reached this target. It's done. You can check it on your charts. Now, pound New Zealand was the trade of the week. Last week, I said expect two things, that this is going to push higher, correct, and push out of here. either that or we're going to get one more down. We're going to look at this during market analysis. We've got one more down, we've got a push to the upside, but it's still not getting out of the structure. You'll see how that one is playing out. So that was pound New Zealand, CHFJPY, very interesting also. Now this was CHFJPY, a simple three-wave move to the downside. What does it do? It pushes up to the upside, although it was not giving a good entry, but that is exactly how CHF Yen has played out. Okay, now you can see that this is the move on CHF Yen, has made this move. You'll see on another update that it has actually moved higher than that. Pound CAD, we spoke about it last week that we've invalidated this. It has now broken the top here. It has moved up here. That is pound CAD. Now pound yen, this is where you'll see a lot of updates on this one. This is where this one started. As you can see, we wanted this one to go all the way to the upside here, up to 142, which is already reached and beyond. Now this was the next update on pound. We're saying that, okay, it needs to push a little bit lower, which it did, and then pushed up higher. As you can see now, you'll see with the next one, we still wanted it to go even lower, but it's just continue going up higher like that. All right. So that is pound yen, and then eventually this is how it played out from around this area. This is over 300 pips on pound yen, and all that because of focusing the Elliott Wave theory. CHFJPY, we already spoken about this one. It was already pushed higher, and this is how it has eventually played out. As you can see, eventually giving us an entry here, and then it pushes higher. Now from here, you can see that I've shown you only 2 trades so far that have not played out, and it does happen. You do get some that don't play out. Now look at USDJPY as well. USDJPY, this was the trade here, pushed up higher, and we've dropped here, or we've dropped here to this level. Not that level, apologies. We've dropped up to this level. Now we've got we've got the price around here on USDJPY. Now what I've just said about the yen pairs, I'm expecting them to push higher because of silver and gold that have broken down. Okay, so this is also EURJPY. EURJPY, you can also check that. This is how EURJPY has played out there. How many trades would you have got in here? This is EURJPY, pushed up higher as expected. Now this is all because of the wave theory and understanding how the interbank market works. Now this is gold already. This was, let's just check the date. This was November the 20th when we were expecting the gold move to the downside. It makes a 3-wave move pullback. We already spoke about this. 3-wave move pullback. Anybody could have expected it to go in a straight line, but you saw the update when it made this. It gave us an entry point here on the blue box, which we are now expecting to go into the blue box like that. Another blue box, the higher degree blue box there. And that is how the market works. That was the previous update on silver. The same thing, expecting it to drop. We are now here. Now silver is also very interesting because from the 2nd of July, we have even given a daily chart. You'll see that daily chart there. Pound US dollar, look at pound US dollar. We expected it to push from here. It's already gone up to that level. If you look at pound, that is what we expected there. You will see the update on pound US dollar. Let's see, this was the next update as it was pushing higher. It was getting out of the structure. As you can see, this was the update that the members get in the group. You can see it's going up, and then it is confirming entry, and eventually we got to the just a few pips before target. We've got a bit of a pullback now, but we're still expecting more upside on pound. Okay. AUD US dollar, these are all trades we've already discussed. Now, if you are following me on TradingView, I've posted 2 trades, gold and silver, and with updates as well. So now this is gold, as you can see here. I don't usually post because because I give most of my trades to our members. Now, if you look at this here, everybody would have expected this, same as I'm showing you here. Now what happened, we made this move, pull back here, we could see exactly what it was trying to do, and then updated. The update you see here on this chart that we're going to push a little bit higher. This is the update on gold on TradingView. That's when we were expecting that it was gonna push a little bit higher than we expected, and then eventually we've got this. We're already around here, this level. So let's just play this one. You'll see how this one is playing out. So this is the 3-wave pullback. Interbank market, this is what they will do. And everybody who's got weekends will release the trades, and then eventually they drop it. That's what they do when they drop it. And you all just have to understand the wave theory and have the specific strategy. We've got a very powerful indicator that tells us this. Now, this indicator, I'm going to tell you now just what it does. Obviously, I can't give it to you. That is part of what the members get. So what the indicator does, it will tell you that. Now, I want to tell you the indicator is very powerful, but with anything, there's drawdowns. What the indicator will do is, as for example, it will tell you that this move here has ended. Okay, what it won't tell you is whether this move is corrective or it's going to be impulsive, and that is what the Elliott wave theory does. But it will tell you that this move is ending right here. It will also tell you that this correction is ending right here, pinpointed to the peep, and it will tell you that that move is ready and we're going to go down. The only thing is, it's not going to tell you is whether we're going to get another correction and another correction, or it's going to be a double correction. But what it will tell you is that this move has ended, and there's a next move that should be coming here. Now, if you combine those indicators in the forecasting tool, you get a very, very powerful tool to trade. Now, the indicator will tell you the move has ended, you take the trade. Is it going to be a corrective or an impulsive move? That depends on your forecast, and that's how that plays out. So that is how the interbank market works, and that is what we do. And if you're interested in learning this, you can send me an email as per my contact that you will find under the description of the videos. Under the description of the videos, you will also find my contact details. Let me just go through to the normal ones that you guys see here. You'll also see, these are my contact details. Obviously, once you've got the website up and running, you'll find everything up on the website. Now, those are my contact details, my email address there. You can contact me via my mobile number. Use Telegram or WhatsApp. Either way, you'll get assistance. You can also join the Telegram channel. This is simply for posting these live webinar links. If you want to attend the webinar live, you can join the Telegram link. TradingView, you can follow me there. Do not make inquiries about the course or our services on TradingView because I hardly check that inbox. I use this just mainly for analysis. Right, so that is how the interbank market works. Now let's get through to today's work. Market analysis, let's look at Bitcoin. Now, last week, that's Brent crude. Last week, we spoke about the corrective structure on Bitcoin. I showed you the higher degree structure. I'm going to show it again. Let's go to the 4-hour. Okay, we're on the 4-hour here. Let's switch off here and just show you clearly what we're looking at here. Now, this is Bitcoin. And you'll remember that we had a trade on Bitcoin from here. A clear trade from here where we dropped it all the way down here. And we forecasted these two moves to the upside. Okay, what we didn't focus was that it's going to be a triple correction, and that is what it is, what looks like it's doing now. Now, what are we talking about? We're talking about this. You see here, we've got an X here, we've got a here, you also got another X that is an expanding flat. So you've got an expanding flat and expanding flat here. Just note that Elliott didn't call this an expanding flat, he called it an irregular flat. Irregular because it is, not because it is not common, because this is one of the most common patterns, is because of the B that breaks the top of the A or the bottom of the A, and same as you can see here, if this is the first move, you'll find that this one breaks the low here. So this is irregular, that's what he meant by irregular. And I'm going to show you something quickly about how the labeling. And if you have not read Elliott's work, you will do it incorrectly. Let me just off track quickly, talking about a flat. Now, a flat, as you read it in the Elliott wave theory, is a 3-wave down, 3-wave up, and then you get a 1, 2, 3, 4, 5, right? That's what we all know, and that is labeled ABC. That's what everybody knows. And what do people label the flat as? We all label it as ABC in the lower degree here. ABC in the lower degree, and ABC in the lower degree. Now, Elliott in his book never labeled this as ABC. He never labeled the A as ABC. There are authors that have interpreted the Elliott wave theory, and that it does not mean that it is their work, but they've done a lot of work, and I respect them for the work they've done. That is Frost and Proctor. So they've made this one as to make it simple for traders when we're learning the Elliott wave theory. But Elliott himself actually labeled the A on a flat 1, 2, 3. Okay, 1, 2, 3. So this would have been confusing for those entry-level traders, just letting when they see now a 1, 2, 3 correction where they've never seen a 1, 2, 3 correction. When we all know that the A can either be 5 waves, can only be 5 waves impulse, but it can only be 3 waves within a flat. But Elliott also labeled this as 1, 2, 3 within a flat. He didn't label it as ABC like Frost and Proctor does. Now, if you just Google on the internet and you take what you find on the internet, you will not get the right principles about the wave theory. Because if I just now put my work up out on the internet, next time somebody's going to be Googling the Elliott wave theory, they find my work and they refer to me, they refer to my work as the fact, and it is not. And Elliott also actually says that you should not rely on anybody who has not been trained directly by him to be doing any wave counts. That was already in the 1930s when he discovered the theory, because during that time, a lot of experts started coming out. Okay, so that was just off tracking, and this is just some of the things that you find when you read the work that was written by Elliott himself and not what you find on the internet. Okay, so this is the 3-wave move to the downside on Bitcoin. This is another 3-wave move to the downside, and we're expecting another 3-wave move to the downside. What does this 3-wave move look like? It is 3-wave down here, 1, 2, 3, 1, 2, 3 back, 1, 2, 3 back, 1, 2. We're expecting the last 3 to the downside. You see here, we've got a 1, 2, 3 as well. All of this is making a W, X, Y, X, Z. Somebody made a comment on the videos that how can I just be labeling externally without the lower degrees? You can clearly see the lower degrees, and we don't force the trend. We don't force this. You'll see that in the lower degree, you've got also another WXY there. Those who like labeling a lot. Here, you've got an ABC structure. Okay, this is actually a expanding flat, as you can see there. You also have another ABC structure here, and here, if you wanted to go even lower, you'll label this one as 1, 2, 3, 4, 5. 1, 2, 3, 4, 5 in the lower degree. So this just complicates the chart. For a weekly outlook, I don't go into that much detail. I just show you what you need to do for the next coming session. If we needed to go to more detail, we'll do that, but that is not the idea. The idea here is to show you where the market is going and what our anticipated trades will be. Okay, so that is Bitcoin. Simply WXYX, we're looking for a Z, we're getting this corrective structure. Now we just need to come to this corrective structure, and we'll just do that with the rest of the crypto pairs. We're just gonna go to this corrective structure and look at when is this gonna drop. Now let's have a look at it. Okay, so that is what we're looking at on Bitcoin, the lower degree corrective structure. What you see here, let's go to the yellow color again. What you see here is a 3 move to the upside. It's a move to the downside. So I see here that there's a lower degree move here and another move here that is doing this. So what I'm expecting here is that we're gonna have a move down here. And for this to be complete, 1, 2, we need to have another 3 here, and then the downside here on Bitcoin. So we could be going a bit sideways, a bit more sideways like that, and then move like this. Then it will be like a move like this. Then you've got a WXY structure in the lower degree to complete that higher degree Z. That higher degree Z, that's what you're going to be looking for. Now, if you wanted to label this even lower, you can say W there, and you're going to have not like that. Let's just correct this one quickly. You're going to have this one as ABC structure. ABC structure, and the lower degree here, we'll use green now, another ABC structure there. I don't like to go into this much detail. because it just gets confusing. So I just want you to see the structures. So that is the structure. It's a complex corrective structure here. So what are we expecting with Bitcoin? We're expecting downside in the next coming session and a move to the upside to complete this corrective structure. Then we're going to get a push up until we get the lower degree structure, the low here on the Z, and that's what you're looking for. Now with the rest of the cryptos, I'm just going to come to this structure, which is exactly the same for the rest of them. Now let's look at Ethereum. You see Ethereum is also exactly the same. So what we're going to be looking for is this move to the upside, back, and a pulsing move. Now lower degree, what you're going to have is going to be a move down, a move up, and a structure like this. Now for this to complete, we need to have a green here, up, the green up here, down, and then upside. As you can see, exactly the same as Bitcoin, even if this one can push slightly higher before coming down. What you're essentially looking for is a corrective structure that will drop with divergence coming down here, and then a push to the upside on all of these structures. Both of these are just giving us the WXY structure like that. Okay, so that is Ethereum. You'll see Litecoin also similar. They're all just similar. We've got a three-way move to the upside, a three-way move back. Now again here, using the lower degree, 1, 2, we're gonna get this one here, coming down, upside, complete with the green, upside, and then we come here, down with divergence, and then upside. Simple WXY structure, complete there, the last move, the last Z with, there's no Z on this one here. I have not shown you the higher degree structure. Probably next video, I'll show you the higher degree structure. If I have to go through all of them, we will never have time to go to complete all of them. Okay, so that is the structure. We're looking for a corrective structure on the cryptos here. So the next immediate move on all the cryptos is a short move here, and then upside, then downside. And that is exactly the same as you see on Ripple as well. So Ripple may be slightly different, can be pushing slightly higher, making this three-wave structure like this, and then a drop. Okay, again, think like the interbank market. What can happen here is that this drop may do this and become a flat correction, become a 3-3 and then a 5. So I don't even have to think about how the interbank market, because they move the market in waves as I understand them. So if you understand how wave theory works, you should understand how they move the market, because that's what is reflected on the charts. You see here, this ABC structure. If that plays out like that, and then we can drop. We can also drop from here, then that's fine. But you need to anticipate both possibilities like we did on gold and silver. Right, so that is Ripple, and that is what we're looking at on the cryptos. Now, let's go into the indices. The indices are playing out exactly as we expected. The S&P 500 is making new highs. We're still expecting even higher highs in the next coming week. Now, we were looking at this as a diagonal initially. We have changed that view, and that is allowed. That is okay. That is allowed. So you've got here, this is what we looked at as the diagonal. This is what the diagonal that we were looking at. And the reason why we're looking at this diagonal is because this is a wave 4 in the higher degree. Okay, this is a wave 4 in the higher degree, and that wave 4, let me just clear here, show this on the daily. Let me go to the daily. That wave 4 is part of this structure. It's part of this structure. You'll see here, it's a lot more clearer on the weekly. We've got a yellow internal wave structure here within this blue here. Now we're looking for this to give us the wave 5. Now let's have a look at this wave 5. Now we've got a wave 1 here. Now, as we've just said, we've invalidated the diagonal, so I'm going to switch that off and show you what the structure that we're looking at. This is 1 and this is 2. Okay. Now we're looking at the next leg as 1 in the lower degree. Now this is a corrective structure, and we're looking for a wave 3 in this degree. Now this wave 3 is still in play. Excuse me, and as you see here, we've got a corrective structure, and this is still continuing higher. So in the next coming sessions, expect the S&P 500 to push even higher for this wave 3, because after this wave 3, we're going to get a wave 4. Whichever structure or form wave 4 is going to take, that's fine, and we're going to get this move to the upside. Now, here's another question. Everybody knows that we don't have a diagonal in wave 4. Where have you ever seen that rule on the internet? I've never seen anybody mentioning where the rule comes from, but it is there in the Masterworks, the RN Elliott Masterworks. So these are some of the things that you need to be careful of. If you've got a rule that you understand, it needs to have a specific reference. Remember, the person who did the research here is Elliott, and he had all the data, he had all the analysis and all the characteristics of the structures, not anybody who puts their work on the internet. So you need to refer from the correct reference. Okay, so yes, he did mention that you do not get a diagonal in wave 3 because that is a very strong pulsing wave. So you don't get a diagonal there. So we're not expecting any diagonal there. We're expecting that this is going to be a pulsing wave, a big move, big strong move, continuing higher. And eventually we're going to have a corrective structure in wave 4 to complete that. And eventually we're going to have wave 5 in this degree and wave 4 in this degree and then higher. This will be a 5. So if you're looking at this, this is that, and that. Expecting this to complete then in wave 5. So we could still be in there's still a very long way to go on the S&P 500. Still a very long way to go. So keep buying all these corrections. Let me go to the lower degree, see what is happening now. Now, if you look at the S&P 500, it is breaking the previous high. It's just about to break the previous high, and you had an expanding flat here, and it is pushing higher. It will break the top here and continue higher. So when you see a corrective structure here, whether it's on the 1 hour or the 4 hour, you can take it, you can keep buying that and ride the trend. And that is exactly the same case on the Dow as well. So the Dow, the NASDAQ, also following the same structure. We're also looking at the diagonal there, but we can see that that diagonal is not going to happen. It is pushing higher with a strong impulse. So what do we have? We've got a 1 here, we've got a 2. Let me make this one. Let me ensure that we've got a bit of space here so you can see what we are looking at here. So this is the Dow also in wave 4 here, but then we've got a wave 1 here, we've got a wave 2. So wave 1, wave 2. Now here you also have this one SA. Let's have a look here. Making a mistake here. So this is going to be a wave 1, the new wave 1, and you've got this one as a running flat. Now again, I have to correct, Elliott never called this a running flat. He also called it an irregular flat that terminates earlier. Okay, so there was no specific name for this. So Frost and Proctor gave this a name running flat, so we can understand it. Okay, so that is the move, and we're looking for this one to go and give us a wave 3, 4, and a 5. The wave 4 can take any form, 3, 4, and 5. So this will be a 3 in the higher degree and the 4, and then we're expecting a 5. So we're still only in the lower degree pink, guys. We're still going to get a higher degree 5. So that is still the structure that we're looking for. So the NASDAQ is also similar. We're still expecting much more upside. What is happening now in the lower degree? We're about to break 2 even new highs more again here after this expanding flat. Look for correction and ride the trend. That is the Dow. The NASDAQ, as I mentioned, also similar in structure, already has this expanding flat. We're going higher. We're going higher. Any correction, you take it higher. And that is the S&P 500, the Dow Jones Industrial Average, the NASDAQ. Now let's look at the UK 100. Now the UK 100, we're expecting this to be a 1, a 2, and a 3 here. Okay, so what we're now seeing here is still the same structure, it just made a double. We've got a move here, and you've got an expanding flat here. You get an expanding flat here. It's a clear 3-3-5 structure. Now we're expecting this move to go up. Whether it's going in 3 waves, doesn't really matter, but we're expecting it to go up with the rest of the indices. That's what we'll be expecting on the UK 100. Now correction here, take it up. The DAX. And the DAX is clear. It's a corrective structure. Clear 3 waves, 1, 2, 3, and we are pushing higher. It's pushing in 3 waves, but this is essentially what we're looking at to go to new highs. So all the indices, as you can see, they're going to new highs, and that is what you want on the DAX, correction and a push to the upside. Nikkei. The NIKKEI's got a bit of a messy corrective structure. You've got a 1, 2, 3 back. Looks like a pulsing move. Is it a pulsing move or is it going to be a three-wave move in the lower degree? Let's see what we get here. Are we going to get one more down and then a move to the upside? Then this will be a regular flat and a push higher. But the theme on the indices is clear. The indices are pushing higher and you don't see anything coming to the downside. It's all continuation patterns that we see on the indices. Now the Nifty also an expanding flat right at the top, 1, 2, 3, and this is happening in the previous high. So if you correct at the previous high, whether it's going to make a running flat and push higher or an expanding flat and push higher, doesn't really matter, but we're expecting the Nifty to continue higher after this corrective structure. So we've broken here, we've broken these three waves here, 1, 2, we're going to come down here. This can push higher from here or make an expanding flat and still push higher, but essentially we're looking for upside. That is the Nifty. Okay, so now those are the indices. Now let's look at the majors. Right, so we'll start with Euro US dollar. Let's look at Euro US dollar and see where we were last week. So next week I'm gonna give you a bit of I don't know what to call it, a sneak preview on why patterns work. Why patterns work. I'm going to show you why patterns work. There's a clear reason why we trade the patterns with so much confidence. So last week we were here on Euro US dollar. We expected that it was just going to push a little bit higher and then continue lower. It has eventually pushed up higher with an impulse to this level, and you should be looking for a trade coming down here on the euro. Okay, so that is the move here. So now let's have a look here what has happened. We're still looking at this to make a deeper corrective structure. We've got a pulsing move. We've got a move down here. It could be making this 3 here. That will eventually make this structure. So for now, you're looking for downside here. Any confirmation of downside, you can take this one. Just make sure that you've got a good risk to reward ratio. So you can have this one. It can even take the previous low here. Okay, guys, so let's continue. Sorry for the silence. All right, so that is what you're looking for. Euro US dollar is straightforward, nothing new to do here. You just wait for a corrective structure. I can only show you the lower degree structure. It's clear what you are going to get here. That is Euro US dollar. Now let's go at pound on pound US dollar. Pound US dollar. We've already shown you this one on in the lower degree structure. So on the lower degree structure now, this is what we expected pound to do, and also pound chief will do this as we do when we run through the pound pairs. I expected pound to have a complex corrective structure here. 1, 2. I wanted this to come a little bit lower here, but it didn't, but that's still okay, right? So the trade for on pound, you saw that it was here. I was not convinced with the momentum here. It went up here, corrected here, but eventually went up just a few pips below before target. So what we see here now is that this is all the correction needed. You can see that it's an irregular flat, or it's a regular flat actually. Now we've got a 1, 2, 3 moving up here. Are we going to get another correction and a push higher? That's what I'm expecting. Continuation to the upside. I told the members in my group last week that pound US dollar is going nowhere else but up with confidence. This was Monday before we even got these moves. Monday before we got the moves. And this is the reason why, guys, you need to have a different perspective. When you look at the market, don't just look at it one-sided. Look at the weekly, or rather the monthly on pound. You will see, if you understand anything about, you don't even need to be an expert in wave theory. You can just go into this one small little structure here at the bottom to see that pound US dollar is not going down anytime soon. We have moved 1,000 pips up to that point. Why did we move to 1,000 pips? Now we have this structure to the upside. We have this structure to the downside. Now it is common that you should be getting a move to the upside. The only challenging part is when to take these trades, because this is a monthly. If this is correcting over 500 pips, you're not going to be able to hold that trade. So the timing is absolutely critical when it comes to this, but we can clearly see that we've got a 3-wave move up. I'll show you this in detail now. We've got a 3-wave move down, and now we're looking for either a pulsing move or a 3-wave move to the upside to make this structure. After this, we'll expect this to do that. Now, this is a monthly, and this is essentially about 7 months, 6 months forecast on this pair. So the next move to the upside can take about 2 months or so to the upside, but you need to have timing. You can know the direction of this market and may not make a single pip out of this without the timing, because this is a monthly and this is 1,400 pips. You can't trade, you don't necessarily trade 1,000 pips to 400 pips in one go. Now, why are we looking for that upside? Those who have been watching these videos for a while will know that we've traded this one to the upside, this three-way move to the downside, including this expanding flat here. We've traded this and this move to the downside, 1,000 pips. Now let's have a look on the daily. You'll see clearly those who like to study this at home, you can go and study the structure and the analysis here. Don't know what I pressed there. Let's have a look here. Look at this. Now this, if at first glance, it looks very complicated. It may be complicated if you've not really studied the theory. So now this is what I don't like to do to you guys. I don't like to give you all this, a lot of these letters, because it doesn't really help you to learn if you don't understand the basic structure of the Elliott Wave theory. So you can go and study this and see where it happens. Maybe where it can get a bit confusing is where you've got this AB structure here. This is what we call the AB base pattern. It's also a controversial pattern that Elliott spoke about. Okay, we'll talk about that some other time. Now, this is a three-wave move here up to the AB base pattern, and this is another move with a expanding flat. We forecasted this flat correction. Now, if you go to the date here and go to the date of the videos, you'll see that we were forecasting that this was going to break the top here and drop. And that is exactly what has happened. What do we have now? We've got a 3 up, 3 down. Now we're expecting a 5 move to the upside. What do we have now? We've got 1, 2, 3, 4, and a 5. We're in the 5 now. Are we going to get an impulsive move here? A 1, 2, 3, 4, and a 5? I think we're going to get an ABC structure. Okay? Another three-wave move, just like what we had here. 3 up, 3 back, 3 up. Doesn't really matter. All we know is that this is going up. Whether we're going to get a pullback here, we'll understand that pullback and that correction when it's done. Like I said, you can have a correction with 200, 250 pips, but you need to be able to forecast the end of that correction, and that is where our strategy and our indicator comes in. So that is what you're looking for. We're still looking for more upside on the daily. This is not coming down. It's just correcting here. It's still going to push higher. Let's go to the 4 hour. On the 4 hour, you see that we've got a bit of a pullback. Doesn't really mean anything. You can get out of the trade if you're uncomfortable and wait for it to do this. Again, if you are on a trend like this, our indicator will tell you when to jump onto the trend. And it's not just about this. This is not an entry point. This may have been an entry point. It will tell you when to jump on and ride the trend. So for now, you wait for this to complete and then more upside. That is pound US dollar, US dollar CAD. Now US dollar CAD, if you remember last week, I said that this was going to be a W here, a X there, and a move back here, and then we're going to push up higher. Now it has changed that structure because it has now made a move all the way back here to the 61% of this here. So that is a different structure altogether that looks like an external zigzag like this. Okay, let's just check this here, what the size of this is here quickly. Let's just check the size of that. That's not even the one. Oh, okay, it could be. Let's just check here quickly. Bear with me, guys. Just bear with me quickly. We just want to check where this has reversed. So I was not checking this one that dropped last week. Let's look at the 1,618. Did it reverse the 1,618? Right on at the 1,618. Okay, around the 1,68 area. It makes sense that it has reversed that, but the question is this the corrective structure? Are we now pushing up higher? We're going to look for a correction and push to the upside. So watch for this to continue higher. The target on this one has always been at this high. So it's still pushing higher. Right, US dollar CHF. Now, US dollar CHF, we spoke about this one. was it last week when we said we wanted it to tag here and drop? That's exactly what has happened. We said this is a 3-wave move to the downside. This is a 3-wave move. You see this one here that was marked, and a move to the upside. As we were going up here, I said this is definitely going up. This is from last week, as you can see. Now we're still gonna look for this one to make a move to the downside. One more move to complete this structure, and that will be a clear regular flat. See how powerful this is. Now, this is what they do when they want to move it. The interbank market, that is the theme for the week. As you can see here, last week we mentioned that they're going to push it higher. Now, look at the last spike here. Look at the last spike. It's not even a spike. It's a strong candle. Strong, what some will say bullish candle. It's going all the way up. People will be buying here. All those long positions there, they lose the money, and this is where they drop the market. Only a few who understand how the market works will make money out of this move. Now, we've got this one here, but this is the foolish money now, because the market has already made the bigger move here. Yes, you may get this one to move down here after this corrective structure, but that's going to be a short move. The big move was here. That's where the money was. This was where the money was. You should have taken the trade there. All indicators were saying this is going to drop. That is US dollar CHF. Let's look at Audi. Audi's analysis from the week before was that this was when this was coming down here. We said it's going to make one down, and then we're going to come and take the top here. We've taken the top and broke it slightly. What's the next move? We need to see what is happening here. Is the next move going to be an expanding flat there? The expanding flat has already played out. Are we going to get a move to the downside? Now we just need to see what is happening here. Is this a move to the downside, or is this a corrective structure? At this stage, it is not clear what it is. Let's just see here. We're still looking upside. We're not going down as yet. So this is going to be a corrective structure. We see one move, 3-way move there. You could have this one as a structure like that, not like that. You can have this one doing that, 1, 2, 3, and this one coming down here like that, and then continuation to the upside. So we can see that this is still continuing to the upside. It's not just going to tag here. We're going to have one more up here on Audi US dollar. Okay. Let's look at New Zealand now. New Zealand is also clear. New Zealand has made this move here, this corrective structure here, and continued to the upside. Okay, so that is the move. So the move on New Zealand, also we need to expect a pullback here. We need to expect a pullback if there's going to be any continuation to the upside. So for now, look for this to drop. Okay, we know that this is supposed to go with Audi, so this may just, let's just look at this. Is the divergence on the other side? There's very clear divergence, very strong divergence actually. But we also don't just trade divergence. That divergence does not mean reversal. It can just mean a 3-wave pullback and continuation to the upside. So let's watch how this plays out. Not clear. That is New Zealand US dollar, US dollar ZAR. Now, US dollar ZAR, you saw that US dollar CAD is starting to push higher. And I said US dollar ZAR, expect it to push from here to the upside. Now, we'll be expecting that we start seeing some upside on US dollar ZAR to come and take the top. Even if this is going to do this and give us one more down here, we're still expecting that we should go and retest the top here back. So that means more weakness on the US dollar ZAR after the breaking out of this structure. Okay. So that is what we're looking at on US dollar ZAR. Right, now let's run through the yen pairs. Pound yen, you already saw that we're looking for more upside. We've got a trade running on this one, and you saw this one during trade recap. We've got this one here, which we took again here. The trade was from here, made a double here, made a double correction here before moving to the upside. So this is coming up here like that. Simple structure, simple structure. We're still expecting more here. Correction and a push to the upside until this target. It's going well. We're just looking for continuation to the upside. US dollar yen, I showed you again that this was going to break. We saw this trade. We've missed this up to this level. The reason why I focused at this level, I expected it to overshoot there. It does not have to. There's no rule that says it must. So we've got this reversal here. Now, what is going to happen with the yen pairs? I said because of the gold move to the downside. The yen pairs have not reacted yet. Expect that when the market opens, you should have seen a move to the upside on the yen pairs. But that move could just be making this structure or completing this structure for further downside before we get this to the upside. Okay, now gold and silver are looking downside. Now, if you can't go and sell now gold and silver now if you did not sell it last week at the top, because that has already made its move. You need to wait for another setup, unfortunately. So same here with the US dollar yen. You need to wait for this to confirm if you're going to take this one to the downside. And this downside should only come when gold has completed its move to the downside. Because when this pushes to the upside, gold should be going down to the blue box. When that is done, this one will then come down, then gold starts its move to the upside. That's correlation. Can't trade it without correlation. So we've got here, we've got this, expect this when market opens. That is US dollar JPY, Euro JPY. Again, we're only looking at correlation here. During the week with our traders, we were looking at this now as a running flat, and I'll show you now. We were looking at this to have made a pulsing move, and then this is a three-wave move like this, and it was going to make a move like this. It's not happening like that. That means that running flat is invalidated. So we simply have this three-wave structure for now. But we also see that this looks like a three-wave structure as well. Now, with the theme on the yen pairs, we're expecting that we're going to have a bit of a pullback or a push to the upside here. We don't know what the structure is going to look like eventually, but just because of correlation, we're expecting the yen pairs to push higher because gold is pushing down. Maybe this was going to go make a 1, 2, 3 move, retest the top, down, and then upside. We're just speculating for now. It doesn't really matter. What we're going to need confirmation when the market opens on Monday. Okay, so this will tell us whether we're getting a corrective structure. We're going to get move to the downside here. Doesn't really matter. So let's just keep an eye on the yen pairs. CHFJPY. Now CHFJPY, you saw that my target was around this area. We've got a move here. We took it from right here at the bottom. This was the focus from here at the bottom, but the eventual trade only confirmed here at this area and then pushed up higher. Now this could have been a three-wave move. It looks impulsive, but it happened quickly. So with the gold coming down, this can continue to our target. So let's watch and see. Right, so that is Chief Audi, the same. So Audi can do this and push higher like that, making this corrective structure. Okay, so let's see how that plays out. Not very clear. So far, it's a three-wave move to the upside, maybe a pullback, and another three-wave move to the upside. Let's watch how that plays out. New Zealand. So New Zealand, same as pound. I wanted it to make a move like this. Wrong. I wanted it to make a move like this. 1, 2, 3. X here. 1, 2, 3. And another 1, 2, 3. So as it was going up with this move, let me draw it clearly. I'm showing this because this is what I showed you the last time. So I don't just show you something and then we just move away without explanation. So this is what we had. We had a three-wave move here. A three-wave move that looked like a running flat, and this one was starting to look like an X here. And when this was coming down, I expected that this was going to make a move down, a move up. Up to this point, everything was all right, but then it kept going higher. So I wanted it to do this because then that would make a meaningful structure like this WXY structure and then push to the upside. Now, the fact that we did not get this down, one more down, means that this was all the correction it needed. It's a simple WXY, and this is completed, and that's why this one went like that. Now, this is going higher. We're just gonna have a pullback here, and it's gonna have continued to the upside. Okay, so that is New Zealand, and then the CAD. CAD yen, again, theme for the yen pairs and gold. We've got a three-wave move to the downside. This looks like a three-wave move. Is it complete? Now this can do this. Let's do that. Excuse the ad there, guys. So this can do this here, a move up here, and you get this one as a move here, as a three-way move. Remember, we're expecting that we're gonna have a bit of a push on the yen pair because of gold move to the downside. So we could even have a gap to the upside on the yen pairs. Don't be fooled by this impulsive move on the yen pairs. You could be gapping up when market opens. Structurally, it makes sense for us to just expect, okay, continuation to the downside, but we don't just trade the structure without correlation. We trade it with correlation, and we have to calculate the strength of the correlation. This move down with gold, so this needs to react to the gold move with upside. That is CAD yen, silver, and gold. I don't need to talk anymore about this. You saw what happened here. Silver, 1, 2, 3, and then we're coming down. Okay, expect, we've already broken here. Expect continuation to the downside all the way down to the blue box at around 1560. That's where the blue box is. Okay, so that's where it is heading. Now, if you just come and sell it here, where are you going to put the stop loss? Because it's important. You don't take a trade without knowing where to put a stop loss. What some people will do is they'll come and sell here and they put a stop here. And when you put a stop there, you put a stop that you can't even handle. So much that when this starts going against you, people will be, and then I'll be asking, where did you put your stop? And they'll be saying, I had put it here. So then what's the problem if it's going to your stop? It shouldn't be a problem if you've got a stop loss. So we've got a very specific strategy that helps you get a clear risk to reward ratio, and that's where we took the trade exactly here. And then you've got this drop. Is this going to go all the way? Whether it does not play out or not, we're already moving this to break even. It has already given us opportunity to move to break even, so that if this structure, the interbank market, decides they're giving it one more up, then we don't lose the trade. We're going to take it again here, and then we're still waiting for it to drop, because it will drop. It will drop. Okay, so you need to understand all those dynamics. Now that is silver, gold, the same. As you can see, we've already spoken about this. I can't talk about this anymore. This was a perfect trade, really. We're expecting continuation to the downside. Don't go and sell this if you missed it up here. Okay, if you don't want to miss trades like this, come to our Slack group. Right, so that is gold. Now let's run through the yen pairs. Looking at the yen pairs, pound chief. Pound chief, we're now looking at this as a triangle. And we're looking for this one to keep running flat here. It keeps pushing higher. Correction here, expect more upside. So pound chief, like pound US dollar, you're expecting more upside. Let's look at the monthly on pound chief. See pound chief, the same. It's just the difference between pound chief and pound US dollar is that pound US dollar has already broken out of this. Let's switch off here. Pound US dollar is already broken out of this structure. It's already out of this. So pound chief has not. It doesn't really matter. They should follow each other, and pound chief should eventually get to this level and even break above it before coming down. So the theme for pound US dollar and pound chief, you're just buying until you get to that level. Pound US dollar. Pound US dollar, we've been looking at this correction. Now I'm on the monthly here. We've been looking at this correction since 2016. Okay, since 2016, this correction has been happening, and we've been looking for this to drop. Now, if you look on the monthly, we may be getting a structure like this big corrective structure here, and this one makes a continuation to the upside and makes this a big WXY structure. Okay, we'll update this one as it goes. So it looks like that's what's going to make what's going to happen. We've been looking at this to have made this structure like this, to have made a 1, 2, 3, 4, and the Z to have ended here. But because we see that there's still a move to the upside on the pound pairs, that's why we're now looking at this to continue to the upside on the monthly. Now that will be a big structure like that, that will be a three-way move like that, a correction there. It's an irregular flat or running flat, and then this one here. That would be a perfect three-way move. If you see here, you'll have a three-way move to the downside, a three-way move back. Now you should get a comeback here with this big move here like this. What will that do eventually? Now, if you're focusing, I'm focusing the next 5 years now. You see, the structure can be like this. Now you've got already your forecast for the next 6 to 10 years on this pair alone. So you'll never run out, you'll never not know where the market is going. Let's go to the lower degree. Let's see what's happening. That's long-term focused, but what's happening next week? So next week, we've got a pullback. Okay, just to put into perspective what I'm talking about these pullbacks, let's check how many pips this is. This is a 124 pips pullback. What if it pulls back 200, 500 pips? Will you be able to handle the trade? That's why it's important to see if these pullbacks or corrective structures, how far do they go, when do they end, and when do you enter, and when do you ride the trend to the upside. For now, I'll just leave this and see if we're gonna get a clear corrective structure and a move to the upside. That is pound AUD. Pound New Zealand was our trade of the week for last week. It was here, and we expected this one to, we expected this one to have been a corrective structure and a push higher. When we saw this impulse, we thought, okay, maybe it is, but the indicators and the forecast was not, the indicators were not showing us that structure. It was not confirming that. So this is what happened. We made a move to the downside. This move, we focused it from here until we got here, but you can see all the moves, all the gains have been retraced. Now we're just waiting for this. Even if this comes down here, it will eventually go to the upside. Now, this is still trade of the week. All the other pound pairs, as you can see, they're pushing higher. Now this one, this is the structure that you're looking for here. 1, 2, possibly this is a 3, no, not like that. So this is your structure here. You've got a 3-way move down, it's got a 3-way move here. Now you're looking for this one to have made a lower degree. 1, 2, 3, 1, 2, 3. Excuse me, guys, sorry about that. Okay, then you're gonna have this one here as a irregular flat, running flat like that. Okay, now we could be getting a move, a continuation move from here. Let's see what we're gonna get here. This can start pushing higher from there. So this will be a W, this will be an X, that will be a Y, and we can start going there from there. Now, there's a possibility that this makes a test of the low here and a move higher here. I'll show you what that structure is going to be next week. It's still also a clear structure. So the intention here is to forecast the end of the correction, and at this stage, it is not the end of the correction as yet. It's not the end of the correction as yet. All right, that is pound New Zealand. Let's run pound CAD. Pound CAD just pushing higher there. There's no new trade on pound CAD. We wanted this move here, that did not happen, so I'm still out of pound CAD. So it made a 3-way move here. I thought it was gonna push here. If it had done this, then I would have been interested in buying pound CAD, because then it would have reset for. But as it just, if it just went like that, that means there is no opportunity to ride the trend, because where do you put the stop? So we'll just leave pound CAD for now. Let it run. Let's now look at the euros. The euros, as the pound pushes higher, as the pound pushes higher, if you remember euro pound, we forecasted that this was going to push higher from this level and then downside. And that downside is happening, as you can see. You can go to around this area and check what the date of the webinar is and try and go straight to euro pound on the timestamp. You'll see this. We even have a setup for this on our trade setup. So if you look at this now, we're now expecting that this will be a move here. Let's see here. And this will be the move here with this corrective structure here. Just need to figure out what this corrective structure is here. Okay, looks like a zigzag, 1, 2, 3. Okay, so that is the move that you're looking for. Downside, so further downside on a euro pound, that is telling you that the pound is still going to be stronger. Is it going to be strong only up to this level? Let's see, and then we're going to get a push to the upside. Let's see how that is going to play out. So that means any decent pullback here, you can take it down as long as the risk to reward ratio is good. EUROCHF. Now, EUROCHF, this is a corrective structure on the daily. You've got a 3-way move to the upside. 3-way move to the upside. You've got this pulsing move, 1, 2, 1, 2. This one is going to do that. Then we're going to have this structure. The same way we had it here. Let's take out 1. and then we get this move to the downside. Then that is a corrective structure. That will be a WXY structure. So for now, you're looking for this downside. Let's go to the 4 hour, see if we're getting any confirmation of that downside. On the 4 hour, it's a simple trade, guys. Take this trade at market open. It's another free Christmas gift. Take this trade at market open. Put your stop loss here, target here. Thank me later. Okay, so that is what you're looking at EUROCHF, confirmed. Looking for that to move down. All right, so that is EUROCHF. Please mark this one, Mike, as I don't know what you're gonna mark it as. We'll talk about that later. Or you can figure out something, or I'll figure out something when I do the edits. Okay, so that is EUROCHF, Euro New Zealand. Now, Euro New Zealand, higher degree, we're still coming down. We're still coming down. Euro New Zealand, we've got a trade from here. Let's check from where? From here. Moved all these 400 pips. Let's check that trade on the EuroCHF. See if I can find it quickly. I think I can. So let's find EuroCHF so you can see where that has happened. EuroCHF. It's not very far. This was this month still. There we go. That's Euro New Zealand, not EuroCHF. Euro New Zealand. Focus was this to come down here. But again, like the theme of our trade of our webinar today, we're talking about the interbank market. Now let's look at this structure and see how this one plays out. So I'm initially looking at 1, 2, 3, sell to the downside. What did this do? It did not do that. It made 1, 2. No, it came down here. It came up here and then made 1 more down. Came up here, made 1 more down. So when it did that, we could clearly see what the structure was going to be. It was 1, it was 1, it was 2. Now the 2 was here now, because that was all the 3 waves. 1, 2. Then we expected 1 more up before coming down, and that is exactly what it has done. 400 pips later, that's what that is how that has played out. Now let's have a look at this. So that's not the update. I want to show you the update. This is that move that I showed you. See, upside and then downside. They don't just push it lower. They need to flush out the weekends before those who knows their story make their money. Okay, so that is how that plays out. Now, in the higher degree, this may still be going much more to the downside. Now look at this. It's a 1, it's a 2, it's a 3 down here. We're coming down with this structure. If we get a decent pullback, confirmed by our indicators, obviously, unfortunately, you don't have that. You're going to have to use your own strategy. We're going to look for this to come down here with the rest of the euros and then do this. And that's how we're looking at this structure. That is Euro New Zealand. EURAUD follows Euro New Zealand, so we should be seeing some downside here. So we've made this 3-way move here. The natural thing to expect here will be for this one to push here, take there. But because Euro New Zealand is coming down, this one should come down here. So it will be a structure like this. There will be A, there will be B, there will be C. So let's check this one to come down here. That is EURAUD, EURCAD. EURCAD, watch out for this to come down. We've got here 1, 2, 3. Can this be a pullback here? 1, 2, 3. Let's just see what structure that will be. Orthodox law here, we've got a 3-way move to the upside. Are we going to get this as a 3-way move and get another move in 3 waves like this before drop? So let's see what this is going to give us. So with the CAD, with the USD CAD pushing up, it looks like the CAD is going to be weak in the next coming sessions. So this could be the move that we're looking at in the next coming sessions on the daily. AUDJPY. Expect this corrective structure to break lower and back to this level. Possibly make this structure. Not like that. Sorry guys, we've got a 1, 2, 3-way move here. I can't see whether this is the orthodox top or this is only a single impulse, because this can actually be a running flat like this, and then we will start pushing higher. But we can see that clearly until we see what's going to happen here. So let's watch this, or if it's going to do this, we can have 1, 2, 3. But for now, not clear. Stay out of that one until we get a clear structure there. That is AUDJPY, and let's look at the rest of the crosses. Audi New Zealand, coming down with the Euro New Zealand. Same as Euro New Zealand, that is your structure, 1, 2, 3, with this structure in the middle, which you can represent with the purple like this. Very clear, very simple. And then we get this move to the upside. Continuation to the downside, look to take the low here. CADJPY. CAD seems to be getting a little bit weaker. 1, 2. Can we get a 3 here? And then we come down here like that. Let's go to the 4-hour for the rest. Right, that is what we're looking at there. So it should be coming down with the CAD continuation pattern here, and look for downside. Very messy. I would not be taking that trade. New Zealand CAD. Now New Zealand CAD is a tricky one. We should be looking for more upside, but that upside needs to give us a deeper pullback, and then a push to the upside. You can't just ride this trend here to the upside. It needs to keep pushing higher. Now, when this made this structure here, we expected that it was going to give us one more down that will come down with divergence and then push higher. We didn't get that one more down, and then instead it just kept pushing higher. So we're gonna expect a pullback. We will find the trade. We will ride this trade, because this trade still has a much longer way to go. And if you look at the daily, or rather weekly, I'm still expecting this to push higher, much higher than this. So we've got the structure here. We've got a 1, 2, 3 here. I'm expecting this one to give us this trend, at least back to this level. You can count how many pips that is. It's over 1,300 pips. So don't worry about this. Wait for this to correct, give you an entry. This is a clear impulse on the weekly, and it's beautiful. So you're gonna wait for this breakout of this structure. Means that this is done, and you're looking for the 1,000 pips to the upside. That is New Zealand CAD, New Zealand JPY. New Zealand JPY should follow New Zealand CAD. At least on the weekly, we're going up to this level. Let's clear that. At least on the weekly, New Zealand JPY, you're going to test this level. Now, testing this level, what it will mean for the long-term structure? 1, 2, 3, 4. For now, we're going to retest the 0.7 area. That's over 600 pips away, 500 pips away, and then come down. Okay, so JPY, New Zealand CAD, New Zealand JPY, look for continuation patterns to the upside to ride the trend. You'll be looking for this structure. Right, that's New Zealand JPY. And lastly, oil. Oil, let's go to the lower degree. We've been looking at 11 string sequence in the lower degree. Let's see how this is playing out. Let's go 4 hour. So on the 4 hour, last week we expected oil to have completed its Z here. Okay, now let's have a look what this has played out as now. We've got 1, 2, 3 to the upside there. We've got a pullback. We've got 1, 2, 3 to the upside. Let me use different colors here. We've got 1, 2, 3 to the upside, and a pullback in 3 waves. 1, 2, 3 up, and a pullback. This pullback can be in 3 waves like this, in 3 waves like this, and you will have a W here, X here, Y here. This can be an X or this can be an X. For now, we'll be looking for the Z to complete. Whether the Z is going to complete with one more down first and then upside, but this is still a corrective structure. We'll be expecting a drop eventually on this. Okay, I see there's something on the chat box. Let's see what it is. Thank you for reminding me. We have skipped AUDJPY. We'll do that just now. So that is the structure on oil, not clear at the moment. Wait for confirmation whether we're going to get a continuation pattern to the upside here to complete the Z, or whether this Z is going to do the X first and then upside. We just need to watch that for now. That is oil and AUDJPY we skipped. This is AUDJPY. Let's have a look at AUDJPY. So CAD looks to be weak in the next coming session. We've got one here. We've got 1, 2, 3 there. 1, 2, 3 there. We've made a move down here. Let's see what we're going to get here. Are we going to get a move there and another one there? That will do that. And eventually this will be making a lower degree WX and another 3-wave move here. Before we get this last Y here, we should have been this one. A, and all of this would have been a B and then a C. Okay guys, so that's all I had for you this week. Please don't forget to like and subscribe to the channel so you can get a notification next time I post a video. Thank you very much for watching. Good luck trading in the week ahead. I hope you enjoyed the webinar. Cheers everybody. Bye-bye.